why I feel in the face of all the problems in the world impotent, and why I somehow cannot manage to transform I. Now here we get to the real problem, because we're always telling each other that we should be different. Now I'm not going to tell you that tonight. Why not? Because I know you can't. Nor can I. That may sound depressing, but I'll show you it isn't. It's very hard. But everybody, you see, who is at all sensitive and awake to their own problems and human problems is trying to change himself. We know we can't change the world unless we change ourselves. So when we are aware of the ego I, we are aware of this chronic tension inside ourselves. And that's not us. It's a futile tension. So when we get the illusion, the image of ourselves, married to a futile tension, you've got an illusion married to a futility. And then you wonder why I can't do anything.
Good morning, everybody. Welcome to today's live stream. Happy to say. I have absolutely nothing planned. Okay. 1 hour chart. Let's do it. What did I even name this video? I don't remember. My God. My ADD is super bad today. We called this How to Identify the End of a Parabola for Bitcoin. Okay. It's super relevant. Let's talk about it. Yeah, usually I do like a voice warm-up thing before I start, but I kind of forgot. So, let's do it now. Okay. Embarrassing myself aside, let's record this. So, how to identify the end of a parabola for Bitcoin? Well, it's pretty common knowledge that we've seen the bottom of Bitcoin around January 21st is when I officially decided to announce, or rather, it was actually December 16th, where we called the initial bottom, which was December 16th, yeah. This candle right here was the test of the weekly 200 MA. You can dig through my trading view ideas to find that if you want. I'll also eventually post it in the trading, or my Discord channel, but besides the point. We also had the secondary test on January 31st right here, and for all of you people who are watching this on YouTube, I did have that picture of where I called the bottom on the intro screen. So with that in mind, I expected a period of lateral compression and a mean inversion that would actually restore the market to a state of potential energy, right? And when you compare that to the previous crash pattern for Bitcoin, that was a longer period of compression than what we saw now. And when you're getting a logarithmic growth curve, and I've read some pretty interesting papers on how similarly it parallels the propagation of viruses as far as how Bitcoin manages to grow, where in an ecosystem, a virus would propagate in relation to number of available resources, right? Where the more the number of available resources, the more price would logarithmically increase to match that. What's interesting is Bitcoin manages to perform something very similar, except in terms of daily active users. How many active wallets are currently in circulation? And price follows that similar logarithmic curve. I believe it's called Gompert's sigmoid growth function if you want to do your own research on that information. I'll also link in the Discord channel the paper if you ask me to. It's a fantastic read. But we've seen this kind of similar propagation with Facebook as well. The same kind of daily active users to price increase. Anyway, what's interesting is each cycle, in theory, should be longer than the next cycle, right? And what was odd is where we had the test of the bottom values over here initially, right? And it lasted far shorter than the subsequent time, which took, if I recall correctly, around 320 days before it actually started to see its next reaccumulation period. And oddly enough, what really threw me off is this final cycle only lasted a third of that time. And that's one of the huge reasons why I wasn't able to predict the beginning of this here parabola. It wouldn't be logical to see an increase of the speed of the cycle when you're seeing logarithmic growth like this. So that's part of the reason why it threw me off. One thing also, we need to consider is the generated mass from the move after the period of accumulation. And we can also look at this in terms of cycles of macro level expansion and compression, which is super important for identifying market cycles. When you see significant expansion like we see here, this huge red plume of mass generation resulting from upward trend or significant overexpansion, the subsequent result is a period of net compression as defined by that, right? Where we start to see a long period of just lateral movement, right? So from this location to this location, price compresses, right? There is some variance as defined by its 1.25 standard deviation. But you'll notice that these blues and greens in the 3D wave PM are the compression of all those periods at once. So if you consider just exactly where we are in terms of that compression, we get some pretty interesting results when comparing it to the previous cycle. Right? So volatility overhead, the previous overexpansion is no longer expanded at this location, right? It finally radiates and disappears. At that location, what occurs? The parabola of the last crash pattern, or rather marking the end of the last crash pattern, followed by reaccumulation. Right? Reaccumulation is the compressionary period after the initial markup from the market bottom. And it is awfully probable that we are seeing the same thing here, where we had the initial market bottom followed by the markup, and now potentially that same period of compression. And what's interesting is this compressionary period right here, this final compressionary period of the market bottom, is seeing the same area of compression where the volatility overhead is just evaporated in each instance. And then, even better yet, we're seeing this right here, this same graphical pattern. Oh my God. So let's just look at 3D wave PM and compare. So the upward expansion after the market bottom looks like the following. Where volatility overhead evaporates, right? And we'll draw that out in each area. Which is followed by a brief period of compression. Only a few candles, mind you. Then what happens? Then the parabola on Bitcoin occurs, that the markup, right? The higher high, that occurs, which generates its next plume of mass, right? This small generation that happens right here. And guess what we're seeing? We're seeing that same generation form right here. And it's reasonable to assume that we're still going to see this compression radiate up to our higher time frames like so, right? And that's really what our reaccumulation is going to look like. And the bull run won't begin until we start seeing the net expansion of these periods here, right? When we start seeing trend from a place of compression, that's going to result in the next bull run. So it's very reasonable to assume we're going to get a retrace, followed by compression. Very long period of compression, mind you. It's going to be quite the alt season in this area, right? We're going to see the same thing here. I have taken some short-term profits on my Bitcoin longs. I'm waiting for the retrace. When the retrace hits, I'll try to catch the swing low by looking at our longest overexpanded periods on the micro time frames. And then this compressionary period will be the tightest period of Bitcoin trading that we've seen this year, right? This same compressionary period here and here resulted in the initial formation of volatility overhead in each of these examples, and then the next following downward expansion that we see both here, that's also this generation of mass here and here. The parallels as far as distributional behavior is uncanny. So, the upcoming compression that we're looking for here will provide plenty of long opportunities on altcoins. And as soon as we get some positively crossing mean reversion pivots, I am tremendously excited to see how that will play out. Particularly XRP, the weekly chart is extremely bullish from what I can tell. Now, let's actually talk about the micro time frames. Just waiting for 3D Wave PM to load, and we're going to do it on the 1 hour chart, just for the higher resolution. Right, our longest overexpanded period, if we do a bit of math, on the 4 hour. If we take it down to actually the 15 minute, our longest overexpanded period is 3,520. And you can check that on your own 3D Wave PM. 3,520. Right. Which, this was the trend defining pivot that has supported price. And if that is entered, the parabola is over and Bitcoin will officially enter its compressionary period. Okay. Because if we enter this band here, price will need to revert to at least 6,800 and at the lowest 5,200. Okay. And of course, all these pivots are moving up all the time, right? Our mean reversion pivot back here was 6,800. And that same pivot is actually now at the same level as the target for the mean reversion. So these values do change very quickly. So if we ran at this band, it's going to be as bearish as we get for Bitcoin. And actually, I believe this will be the last drawdown of the bear market, this mean reversion here. I firmly believe that. Yeah, this is after we see this bearish mean reversion, I am no longer going to be a bear. Because this will be the final compressionary cycle before the bull run. And price will not resume trend until the 3,500 wave PM. Oh, you know what we can do? I'll show you. Because we can actually just set up a manual wave PM to define our compression. I'm going to use the blue one because I have that visibility up. Okay, we're going to change length 3 to 3,520. It gets a little wonky when you do these really macro periods. And it's actually lagging my chart a lot, which is unprecedented. Okay, this is not behaving how I expected it to. It might because I'm doing a weird period, or the period look back doesn't match how high of a period I've chosen, so we could probably just do it on the 4 hour. Okay, my bad. Okay, now, wait, where's the daily? Oh, we could just do the daily. Right, so our longest overexpanded period on the daily is 100. Okay, well, fancy that. Now it's just the correct period. And I don't have my chart settings correct. Oops. Appearance. Scale? No, what is it? Indicator name label. There we go. Nope. What have I done? Okay. Well, I've ruined everything. I guess I'll figure it out later. Just change it to 100. Beautiful. And now we're changing back to the daily chart. Cool. Okay, finally. So, here's a fun fact. If a wave PM rating goes above 0.9, it will go below 0.7 before it can return above 0.9. Right, so every time we're above 0.9, it retraces down to 0.7. Every time. And it will not enter a state of overexpansion until the compression has completed. Okay, so how's this useful information? Well, we can anticipate that we will be in a state of compression until our longest overexpanded period, the 100 period, sufficiently compresses. So, what we can do is actually look at this previous compressionary period and do something cool. I'm actually going to include the volatility overhead in this example because it's a varied overexpansion. 300 period. Okay. So we're going to do two things. We're going to change this to 300. And we're going to load up the 300 period wave PM as well. Would you look at that? So, when we get our longest overexpanded period here, which is the 300 period, as we see here, trend cannot resume until what happens? Until that longest overexpanded period returns below the 0.7 value, which happened on this candle. So, my God, I did not expect it to be this accurate. I'm kind of impressed. Wow, I did not plan this. Okay, so this is the exact candle where trend, or rather, where the longest overexpanded period is technically compressed enough to resume trend. I can't make this up, guys. So as soon as that compression completes, right here, trend resumes. On the same goddamn candle. Yeah, I'm going to consider that the efficacy of the current signal is going to be effective, to say the least. Yeah, so the 100 period in this instance, and let's set an alarm for it right now, shall we? So current longest overexpanded period is 100. It might change, come to think of it, because this overexpansion is still quite significant. So I might need to adjust it in a few weeks, but hey. At this time, here's what you should do. Right? Wave PM meow mix. band 3 oscillator crossing down the 0.7 value. We're just going to call it boron. That's very exciting stuff, guys. I'm just letting that sink in. Yeah, that's definitely going to be the signal to find the exact top. Okay. Or the exact start of the trend, excuse me. Let's actually talk about the exact top now, right? 1 hour chart. Kind of curious about the on-balance volume right now. I know I don't look at it that often, but... Oh, I only have 2 minutes. I won't go down that rabbit hole. Right, we have the 160 currently, and we're seeing that mean reversion now. Yeah. So it's implied that we're reverting down to this mean here, which can, in theory, happen through a lateral move. I'm actually currently short. Hold on. We can actually do something interesting here. We can actually take like a short right now, like this very second. No, this is great. This is fantastic. Right, so 16 period CCI roll down just happened on that candle, which was 0.5% ago, and your downside is currently 4.5%. It'll probably reduce to around 3% by the time the mean reversion completes, but this is a very safe short entry. I mean, your stop loss is just going to be a higher high or above the 3.2 standard deviation, which does reduce you to a 1.1 or a 1-to-1 profit ratio. But what's important is, let's just draw this mean right here. And I've got 30 seconds to show this, so bear with me. All right, on our 4-hour chart, we're just going to quickly look at our longest overexpanded period, please. 220, right? So let me show you where the 220 mean reversion pivot is. Okay, so the mean of our short-term mean reversion is actually the exact same area as our mean reversion pivot for the 4-hour chart. If it crosses, this could be like the exact top for Bitcoin. Wow. This has been a very enlightening live stream. I'm happy with this. Even for me. You know, the more I look at the chart, the more it makes sense. Okay, let's check the YouTube comments, eh? Pop out chat. Get your coin questions in. Great days, that's like 10 coins. If somebody asks other coins, I'll do those too. Could it be that we're in the same area as January 4th, 2014 on the BLX chart? I'm hesitant on that. I think the mass readings are more favorable to the scenario I painted. BLZ, BTC. Aeon, I'll do Blaze. That was the first coin I ever called. We made 160% on it. It was actually, yeah, we called it right there. We got the exact bottom of that swing low. Or 116, excuse me. And then we also took a secondary entry on the actual cup and handle entry. We used a Fibonacci retracement on it, and it actually worked out really well. You know, when I first started doing TA for other people, I was inclined to do basic TA that everyone understood and reinforced it with volatility theory. Because I figured, hey, I'll get more followers if I, make my content accessible. And then my business model has changed to, I'm going to make my content prohibitively advanced to encourage longer-term user engagement. And that's worked out pretty well. And to encourage indicator sales, but that's besides the point. Okay, how does it currently look? Dude, this is so noisy. I wonder if it's possible to do a different kind of wave PM calculation that uses the candle high and low instead of just the close. Because I just noticed something. Do you see how all these candle closes are in exact the same area for like the last 14 candles? Right, that results in a very low 14 period wave PM reading. But in reality, this range has actually been super volatile with all these wicks. It just so happens that the candles have been repeatedly closing in the same area. So using the candle swing, or using the wick swing high and swing low, that might actually end up being profitable. Not profitable, more accurate. Of course, you could just increase the resolution by going on a shorter time frame, but that's different. I don't know what to think about this, man. It's a weird chart. Neo. I'll take a look at power, actually. Wow, that chart looks exactly the same. Yeah, you've got a macro level mean reversion pivot and it hasn't been crossed. Simple as that. Take a look at Link. Yeah, to my understanding, we are directly on top of the mean reversion pivot, right? Which is currently the 50 period. Yeah, so we're seeing some super high volatility on the pivot itself. I mean, it's going to be hard to tell whether we have a sustained break upward or a sustained break downward until it actually happens because the volatility is too high right on top of the pivot. So, yeah, look at that. Our mean inversion pivot's right there, and we're just trading right on top of it. So, I don't think it's actually worth trading right now. Maybe we're going to get a wave PM expansion that explains things. I mean, it's currently implied to the downside, but I'd like to see a little bit more expansion first. Yeah, it is implied downward. There is downward implications on Link. It's a soft signal though, so I wouldn't commit to it. Do you know why we have such a close correlation between Bitcoin and Ethereum these last few days? I mean, a better question would be, do I know why they're so closely related like all the time? It's just kind of been a habit of the bear market for them to trade side by side up until recently. The divergence only started a couple months ago, so this is more return to the state of normalcy than anything, I'd say. Take a look at Matic. It ended up being super compressed. I can't define the mean inversion pivot, so I don't seem to see a point here. Yeah, I can't form a solid opinion on this. I'm sorry. CCI isn't telling us anything important. Wave PM is choppy. 3D Wave PM is compressed, but we don't have implied direction. And to my understanding, this is way too volatile to actually safely enter at something, unless you want, you know, a 10% stop loss. TRX, that's a good choice. You know, I'm inclined to look for some positive mean reversion signals here. Though the mass generation has been super choppy, right? Here's why. Because this upward expansion happened and it was immediately followed by mean reversion and then implied downward expansion. So what's nice is when you get compressionary periods, the definition of trend to the upside is super well defined. There's a lot of clarity to upward trends after compression, and their mean reversions are super distinct, right? I shorted TRX at 630 or 660 right here, and my contract expired at this location, and I'm upset about it because that was such a profitable position, and I wish I was still in it. But now we don't have a positive mean reversion signal because it's a negative mean reversion. You know, I mean, we could try to find support on the bottom of the band by looking at the 140. This should actually be a little enlightening. Let's check it out. Yeah, see, we're seeing the re-expansion of our longest overexpanded period from the previous uptrend, and that makes for a choppy chart. So I'm going to predict that we're seeing a retrace followed by a short bunny hop and then lateral mean reversion, another period of compression. Really, though, TRX is a good project, and I think this has historically been a great level to buy at. Just be aware that nothing's going to happen for a few months, I believe. Can I look at Nano? Yeah, I called Nano pretty recently, but to my understanding, it did stop out. Yeah, it stopped. Downtrend is still sustained. I don't think I'm going to try again on it. I kind of want to see a higher high before playing with that downtrend. Let's take a look at ENG, because I have a small position in this as well. Yeah, we're retesting previous lows here, but take a look at the 220. Yeah, it's not really relevant right now, because it's, again, converse expansion. I mean, I don't think this is stopped out. I'm still in it, but I'd be careful. All right, it's been 40 minutes. Let's go ahead and check the comments one more time. XRP USD longs on Bifinex. What's the ticker for that, Great Days? You know, I'm going to be honest. Long to short ratios don't really have that much predictive power. I mean, I remember last year at one point, silver was being shorted at 92% rate. 92% of positions on silver were shorts. And it went down. Right? So people can be right, guys. Like, there can be a difference between euphoria, but I just don't think it's that strong of a predictive signal. That's why I don't look at those charts. I mean, let's do this. Just hide the band for a second so I get a thicker chart. Okay, show me one instance on this chart where it had predictive power. I'm seeing divergence here. And now it's just being spot on. Wait, how do you use this information? Because it's generally typically spot on. Like all this throughout here just followed play by play. And then this was significant divergence. I mean, you could just assume that's accumulation, right? I don't see what the whole fuss about this chart is. It's not relevant to me. Yeah, if Bitcoin drops in USD value, XRP will most likely too. That's true. But I do want to point something out. All right, this USD chart does imply a super strong breakout. And there is significant upside here. Okay, folks, that's going to be it for today's stream. It has been a pleasure. Make sure you like this video. It really helps. And be sure to subscribe to the channel as well. I do this stream every day at 1 p.m. MST. I'll see you folks later.